Welcome to Plain Talk. I'm here today with my partner, as usual, Matt Gomoll. And we're here to always talk about things and how they affect your portfolios in just regular talk. So, Matt, what are we talking about today?
Yeah, there's been a lot going on in the last 2 weeks. There was a crash in Bitcoin, crash in gold, but more importantly, there's two topics today I think that are pretty relevant. AI disruption of the software market. That was a big story last week in the stock market, so I want to kind of cover that. And then also, Kevin Warsh just got nominated to the Fed chair position. That'll occur in May if he gets confirmed, but that's kind of on the horizon and a big deal this year.
Well, let's start with tech and what happened there last week. I think for a lot of clients, like we see a lot lately, right? We see a lot of stuff more than probably in my entire career where, like, when people trade on rumor, things are moving very, very fast. So we saw some significant movement in tech and then a very quick buyback. What are your thoughts?
Yeah, so this was throwing the baby out with the bathwater kind of moment. There was an immediate fear, and we've seen this kind of happen a few times now where some certain sector looks like it's going to be impacted by AI, some new tools released. In this case, it was Anthropic, who runs the Claude AI, released some cool integrations and things that allow you to make your own software and tools. And all of a sudden the market saw that and said, oh my gosh, you could make your own software. And it started selling off kind of indiscriminately in the software market. Some stats I have here, in just the first 5 days of February, the software sector was down 12% at a low. It's down, it's back up 7% since that point. So it's 7% off that low point, but it's still, I think, 27% down from its high in September, right? So there's damage that's been done there. The last couple of days, yeah, it was a rebound where people realized, all right, that was a little overblown. They're not all going to be disrupted. Even, companies have been releasing good earnings reports, still showing growth. But what's going on is company or investors saying, yes, I understand you have this recurring revenue and even maybe some growth, but we're less willing to pay, X multiple, right? Instead of paying 30 times, we're only going to pay 20 times or whatever the case, which created that drop in the value of these companies. The other aspect of this, which was also in the news last week, was we saw private credit and business development companies getting hit. And you're kind of like, well, what was that about? There were private equity and private credit managers like Blackstone, KKR, Blue Owl, who were selling off last week. And you're like, I thought this was a software story. What's going on over there? Well, it's because those companies in their funds own software loans, right? So private credit, part of it, maybe even up to 15 or 20% of the private credit market is loans to software companies. And if you're worried about software companies doing well or being disrupted, well, you're worried that they're going to be able to pay back those loans. And so it's kind of like a domino effect of, you saw it first happening where, because public stocks are traded, daily, you can see the instant market sentiment towards those companies. And then it trickles to, well, we can't see what's actually happening in private credit and private equity, but we're going to hit those companies, like the parent companies of the funds, and re-rate their price as well. So all that was kind of happening really, really quickly. And it just comes down to, the fear is, are these companies, which are software companies built on subscription models, are they going to have a moat, or is AI going to replace them? And that's the question that nobody really knows right now, but I think we can make some educated guesses around.
Yeah. I don't know if you saw this. I think it was yesterday or the day before. The stock prices of all the major custodians fell. Schwab, Fidelity.
Yeah.
And it was because Altruist, who's an up-and-coming custodian who we may look at in the future, launched some AI software around taxes.
Yep.
Now, I think what people need to be cautious about is that, we're in that world, Matt, and I think we know with certainty, for example, because we have a lot of our clients' money at both Schwab and Fidelity. Well, they're working on that stuff too. Like just because somebody made an announcement, I think it's a pretty bad knee jerk reaction. Everybody sits there and goes, well, like they've kind of cornered the market on AI. What I would tell clients out there looking at our own business, the the time it takes to move from one place to another is not instantaneous like a lot of the people out there buying and selling these stocks are. Like, hey, I have that. And so sometimes you're sitting there going, but somebody on the other side is also developing this, and I'm going to use that
Mhm.
as well. It's this reaction of these things happening very quickly, um, that I think we would tell our clients, it's why we structure things in buckets and do things like that. And you're hopefully not overexposed to certain things, because I think we're going to see this a lot in the future, but we'll see it again and again and again. Now, the other side will happen as well. I was on a call with a buddy of mine yesterday that works for a big AI company and does things in data migration. There's a lot of things they do, right? And I was talking about what it costs to transfer things from one place to another. Uh, they did a project for a big company, millions and millions and millions of lines of data. The charge to the company to migrate it was $20,000. So there's all these like it's kind of like sands in an hourglass almost, right? It just depends on which side of that you have.
Yeah, it is. There are definitely, like over the last 10 years, there's been a proliferation of software. Anything can get launched. And now we're going to see there's even more, right? Like AI is going to create it, and there will be software companies that are just, built by an AI. Um, so there are tools that companies use today, which they might just replace and say, we already pay for AI and we've got some engineers and they're just going to build this thing in-house from scratch. And it's not that hard. However, there's a lot of other stuff that won't get disrupted because it's too complicated. The margin of error is zero. You cannot make mistakes on certain things. And a good example I heard recently was Salesforce, right? Salesforce is, if not the biggest CRM company out there, it's like definitely up there. And their stock price is down on AI concerns. And it's like, well, is anybody really gonna build their own CRM completely from scratch with AI and run it in-house? There are millions of bugs that have been found and debugged over the last 15 years in Salesforce, and now you're just assuming that responsibility to manage in-house. Like, it's not a realistic thing. However, I would say, is it going to be easier for a legit software company to compete with Salesforce and put pressure on their margins? Absolutely. Right. So I think some of these software companies are going to lose pricing power through competition, but not like, oh, we'll never use software, only we're going to use AI and we're just going to build everything in-house. It's a little more complicated than that. But yeah, that we're going to see this kind of, some new thing is launched and it's going to hurt whatever sector for a little while, as and you're going to take a little bit of the shine off that sector. And this is kind of a good time for looking at the physical world, right? Software is not a physical thing. It's all digital. So now there is a bit of sentiment in the market that like physical things, manufacturing,
Energy.
infrastructure,
Yeah.
energy is a good place to be.
Yeah, I mean, I could talk about this a lot. As you know, in our firm right now, I'm, doing some stuff right now where we're going to be switching CRMs, for example, right? And we'll be leaving Salesforce and going to another one. But our reason for doing that was that we needed something simpler, not because Salesforce would. In fact, I don't know that they'd be really easy to replace on a company with 5,000 people, right?
Oh
And
yeah.
all of them have different AI overlays. I will say that uh, what I would tell people out there is before you go through these reactionary things, because we have lots of clients out there, they're professionals now, or they were at a different time, asking themselves if even with AI, would they have stopped everything that they were doing? Did they even know the right things to think about? Right? Because that's part of what these companies do. They still ideate, they still do things that you just don't even think about. Um, Again, I'm not. I don't want to be Chicken Little with the skies falling. we're embracing AI here at our company. We're using it in almost every piece of software we have. We have some type of real AI that we're using. It's not displacing jobs, certainly for us. It's enhancing our ability, and I still remain optimistic about that. I think that I think the fear. I'm not saying it's unwarranted. I think the knee jerk reactions are unwarranted, and I always want to remind people that there's a lot of stuff that happens in the market by people that are trading um, that are not focused on long term and have no issue with taxes, on what they're doing. So they're just doing they're trading and they're making the market move real fast, but they're trying to capture short term profit. Not even all of them believe that by the way, that it's a long term problem. Like they're literally making trades to try to go. I'm going to try to capture something right now, and it's almost like a group of lemmings, like whoever's out front walking off the cliff. Is causing the other ones to walk off as well.
Yeah, and I mean that is absolutely the case with, this isn't necessarily like major large cap growth active fund managers saying, "Oh, I need to completely obliterate my software exposure." They're getting hit by it, but they're not the one necessarily saying like, "Oh, I saw this thing happen. I'm going to trade out of this sector." It is, other really active high frequency traders and algorithmic based and hedge funds who are probably started this move, and then you have other systems respond to it. And so, yeah, this isn't necessarily saying, oh, this whole sector is going to be left for dead. There are certainly companies that are not good in it and just have like a really thin product that is replaceable.
Right.
Yeah, I would be worried about them. Is Adobe and Salesforce going out of business? I don't think so. I think they're leveraging these tools, maybe a little pricing pressure for sure, but not like gone from the map.
I think a lot of the replaceable ones, Matt, they were replaceable already without the AI overlay that just accelerates their death, so to speak. So let's talk about the Fed and Kevin Warsh. And I would say that like one thing is this administration, contrary to what people think, they don't really surprise us a lot, right? Like, I mean, they're pretty overt. Like he was always on the short list. This isn't like sometimes they'll do a Fed share, but like out of nowhere comes somebody. But Warsh has been talked about in a group of two or three for a long time, and I think that nobody's surprised by the pick. He was the favorite, and I expect that he'll be confirmed. I think even centrist Democrats. You and I was talking about Midwest Democrats. I don't think this will be a. I don't think this is going to be like a real hard fight.
No, this won't be a contentious nomination. I think more of an obstacle is the criminal inquiry into Jerome Powell that certain senators have said, "Hey, we're not voting on approving the new guy until this is resolved." I think that'll probably go away, right? Like my guess is that whole looking into could we indict over this, I think it'll go away. You just, separately from this, we just saw a grand jury choose not to indict a bunch of Democratic congressmen over, I think it was like their video to the military, whatever.
That's what it was. Yeah.
Yeah. It shows like, all right, there's some pushback going on. The thing against Jerome Powell was always really thin. And so it's like, it's not going to go anywhere. They'll drop it so that Warsh can move forward in a timely manner and make it in, by May. He's seen as, so he was a previous Fed governor, and some of his statements and views in the past are considered hawkish, right? And hawkish meaning we should have higher rates. We should have less Fed involvement in manipulating the market through buying more debt and doing other stuff, right? There are tools outside of just the Fed rate that the Fed can use, and he's more hawkish on how they should use those things. However, right, we know that's at odds with what Trump wants. Trump wants rate cuts. He thinks the rates are too high. He's been pressuring Powell for the last year and change on this thing. So you have to believe in the interview, he said some stuff that was at least convincing enough. This gets into the Fed independence, right? We're looking at a guy who had one set of beliefs, but he got the job. So what did he promise? That is certainly up for the bond market to weigh in on, and they certainly have in the past weighed in on Fed credibility and Fed independence by moving long-term interest rates, right? When they're more worried about stuff, they sell long bonds and those yields go up, and that puts pressure on, the Fed and the government to cover that debt.
I think so. A couple things. Like I really think that when you talked about the Powell thing, right? One, I think that this administration, I don't like that they do it, but I believe that their tactic is pretty transparent. They love to push to the edge to see what they can do. And that doesn't
Mm-hmm.
mean just for today, right? Sometimes they're pushing stuff to say, can I actually do this to a Fed chairman? He's on his way out anyways, because they're setting up the long game whether Trump's there or not. Like, what will our power be? And they're trying to expand their power. I have I have very little. I'm very confident on what you just said that they'll just drop it now because they're going to get their guy.
Yeah.
Um, I'd be surprised if they didn't, and it would be suicide at some level, right? On the other hand, like I think we always do this. We take people out of context. So I didn't see it. I'm going to go back and look it up now that you brought it up. But sometimes a guy like Kevin Warsh said that in the moment, and it made sense in the moment what he was saying. Like when he
Yeah.
said that, the Fed was doing, in his opinion, and in my opinion, at some time, too much. Like I am a firm believer on monetary policy that they went artificially low to a point where I felt like we were in danger because they had no more levers to pull. Interest rates were near zero in other parts of the world, and like it was negative, right? You were getting charged to keep your money in the bank in
Mm-hmm.
Germany and places like that. So in the context, I don't know when he said it, but it probably made a lot of sense. And I will say that if you take all the politics out of it, I don't always like the way that Trump delivers things, but I believe I'm on record of saying this before. While the Fed should be independent, they absolutely should be collaborative with whatever current administration is there. Because part of this administration's point was we have a certain foreign policy, we have a certain energy policy, we have these policies. And at some level, our monetary policy needs to tie in with that. I think the Fed should be independent as they shouldn't be fired. They should be able to make certain moves. But that doesn't mean that they shouldn't be having conversations with the administration that says, how is our monetary policy affecting your other policies one way or another? Because at some level, the American people voted whoever in. And I don't mean this just for Republicans or Donald Trump. I mean, if Josh Shapiro is the Democratic president, however many years from now, they should be collaborative. I mean, it should not be this animus either that there's been, and there's two sides to every story, I think. So I think that I am optimistic about Kevin Warsh being the Fed chairman. I think from what I'm seeing, he would be a very, very solid choice. That he said those things at one time, but he's also very pragmatic and he is looking at the world. And we all do know, by the way, Trump's not picking somebody that hasn't already signaled whatever my beliefs are on what the Fed did in the past. I believe interest rates should be lower now. There's no doubt that
Mm-hmm.
that covers. There's Kevin Warsh didn't walk in and go, "I'll get to you after you put me in there." By the way, look at my comments from 5, 6, 7, 8, 9, 10 years ago. I'm sure it was very clear. I believe interest rates should be lower.
Yeah. And so he's, I think, undoubtedly going to deliver at least two. I'm sure he probably does have to walk, right? Like, so, we all got to remember he's the Fed chair. He doesn't make the decision. He would maybe, as Powell did, try to influence the group to reach a decision, but each voting member gets to make their own choice. So does that mean we're getting to 2 or 3 rate cuts this year? That's kind of the ballpark. Some people are thinking even as many as 4. I don't think he'll get to 4. I mean, even just because he's not getting in till May. So I think it kind of gets to, he's got to keep the credibility of the Fed, because the damage done by getting in there and cutting too much, it'll spike the long-term yields, and that's bad. That's bad, right? That's bad for the U.S. government having to repay that debt at this new interest rate, which is over 5 on the 30-year, and mid 4s to high, almost 5 on the 10 if it goes that way. So we don't want that. That's not good for mortgage rates. Like it's got a cascading effect. So you want interest rates coming down without doing damage in the process. So like that's going to be a big concern for him and how he manages that. The other part that I would mention is I think under him, we're going to see a shift from inflation being in the rear view, even though, costs are unacceptably high for most Americans on everyday things. The change, the pace of inflation has gotten under the 3% range, and we're now more worried about jobs. And I think there's going to be a transition to focus on jobs this year. The unemployment rate, so they just released the data this morning, 4.3% on unemployment, $130,000 jobs created in January. However, looking back, there were a bunch of revisions that pretty much wiped out all job growth in 2025. So it looks like there was no growth in 2025. That's not great. Doesn't mean these jobs were lost. It means they were counted and never existed in the first place, right? That's how these revisions work. They put out a number. The number is an estimate. They revise it to a more accurate number. So not like a bunch of people just lost their jobs. It just means we overcounted. And part of that is, immigration crackdown for sure. Slowdown in hiring. And, I think this year we'll start to see some kind of, although companies aren't really saying it yet, some amount of like less hiring due to AI use, right? We've even seen layoffs from Amazon recently, but like the AI productivity is going to start seeping into the jobs market.
Except I think, again, it's going to be, moving chairs on the deck a little bit, because we know that there needs to be a huge infrastructure
Yeah.
build for these things to happen. So while they may be laying up truck drivers at Amazon, they're going to be hiring construction workers to build these things that, as you and I've talked about, they're going to take 2, 3, 4, 7, 10 years to build all this stuff. And like I was going to say, it's a little bit of a conspiracy theorist. I don't mean it as a conspiracy, but if you just kind of read between the tea leaves, it's not very hard to read. I like Besson as a Treasury Secretary, as I've told you. So when they talk about interest rates and stuff, we know the tech companies have gotten in very tight with Trump. And they are, instead of issuing new equity, they're issuing new debt, huge amounts out of Meta, out of Amazon, all these places. So they want rates to come down, clearly. Even if they issue these, they can buy back, certain bonds and stuff like that. But the argument, because I think we always think the big bad wolf out there, and we think it's this administration, like they don't care about jobs. They do. And part of taking on this debt is so that people can build this infrastructure. And so I think that again, this is a concerted effort. This is the kind of stuff I want to see. I want to see a concerted effort where people say, hey, we're holding up building all these things right now, which will hire a lot of these people, which will create a lot of jobs, because we're reticent to borrow money because it's too high. And you also have, you and I see this, we acquire businesses. We know what this is. Part of it is you hold off on decisions because you're like, I don't know who's in there, and I don't know if those rates are coming down. That's why it would be a very good message for somebody, I think you hit it on the head too, Matt. It doesn't have to be huge. A couple of rate cuts, quarter point rate cuts, where people look at their mortgage and that affects one thing. When you want to affect the job market, when those companies are paying a little bit less for debt that they're taking on for infrastructure, they're more aggressive about hiring people and building these things. They want it done quickly. So it could be a real boom. And like I said, I don't think you have to read between the tea leaves a lot to see that every single tech giant buddied up to Trump a couple of years ago. And when you see them taking on debt and doing those things, they have a different phone call than you and I do, right? Like they're having conversations with these people going, what's next, right? Should we be starting to front load this and do it? So I think it's optimistic. I'm not surprised that those numbers got wiped out. That government shutdown was pretty timely for data not to come out, as we know.
Yeah. We're looking at in 26, at least from what the hyperscalers, the Amazon, Microsoft, Meta, Google, all of them are saying, is 600 to 700 billion dollars in capital expenditures, right? That is what they're putting out there. And a bunch of it is coming from debt. And Google, I think, just released a 100-year bond, which is a smart thing to do if you can get the market to buy it. Why not?
Is
Right?
somebody buying that?
I think so.
Wow.
Yeah. So it is a ton of money that is going to be spent. And you're right. There are different jobs, but a ton of construction, skilled trades, data center management, electrical grid expansion, all of that stuff is going to be occurring. And those are, like you said, these are major projects. So if you're in that field, there's going to be more demand for those jobs, and there are jobs that are going to last for years because of that build out. And it is, I think this build out it's not just Google competing against Amazon, competing against Microsoft, against Meta. It's not just the major tech companies, each trying to win for their own, existential reason. It is also a competition against China. And so that's where, there is a national security element to this, and not only national security, but national economy, where we don't want to lose out. Now, we know they subsidize industries over there, and we know like their electric vehicle industry is kicking our butts because they have government subsidies to fund a ton of build out of these things. BYD just has a factory complex the size of San Francisco now, because that is what the scale they're operating at. And not only do our tech companies, but also our administration and, the politicians know we don't want to lose on AI to China. It's just not a good situation if we fall behind like that. And so we're going to see not only tech spending, but government support for that stuff. And so those two kind of things coming together, they want to do it for, tech companies want to do it for their own self-interested reasons. And our government says this also is the direction we need to go, and we need to not lose this race. That's a good thing for those two to be on the same page.
I want people to continue to listen to stuff like this. And I love the research that you do, Matt. And I try to do some myself, because I want our clients to see like not a single voice, that we're getting information from a lot of places. And again, because some of the things that move out there, I don't know why I was struck by this week. It's like, you got a lot of people. I mean, Elon Musk is the richest man in the world. So a lot of people he says something like, he must be right. He's wrong all the time. Right. And this is a guy who said, like, he was like, I'm going to colonize Mars. It's like, listen, I know you're a genius, but I don't know how many people are going to get on a trip for 9 or 10 months to go, like a 10-month trip. Like, imagine you and Lindsay move, and you're like, we're moving here. Okay, well, we're moving there. It's going to take us 10 months to get there. Right. And it's going to be a new place. There's going to be all kinds of bugs and stuff. So now he's going to colonize the moon. Like, he changed his mind. Like a few years ago, he was like, it's this. So I think that's what I want us to be careful too. I think you brought out some great information today. And we'll continue to do it. Is there anything else you want to add?
No, we covered a lot of ground. We'll see how these kind of trends shake out. We're still a couple months away from Warsh taking that position. Probably won't be too much drama, like we said, but we'll keep our eye on it and see what he does come June, right? Like, where he's fully in charge, and maybe we'll see a rate cut by June.
I think next time, one of the things that may come up in our topic is it might come back to tariffs. I know the Supreme Court's coming out with a ruling soon, and I don't know. Like, the Supreme Court, they're humans as well. I don't know how much they read the news, but at the end of the day, a lot of this administration has said all along, we're using tariffs for national security purposes. Well, in the last 3 or 4 weeks, the president himself, in live interviews, has basically said, I'm slapping a tariff on Switzerland because I don't like how the woman treated me or talked to me. I'm slapping a tariff on Canada because the guy made me mad. right? So it's like, I wonder, is the Supreme Court actually watching the news right now as they're coming to their decision going, the argument is, I get to use them for national security purposes. You know, it's one of like, don't believe your lying eyes type of thing. It's like, but I'm going to sit here on television. I'm just going to, there's no way to misquote me. I'm going to sit there live in interviews and name multiple people that I'm doing it because I don't like the person in that, the way the person treated me. That's why I'm doing it. That would seem to say the tariffs are in trouble. Um, I think the Supreme Court's probably struggling with, though, we got to pay some money back at the same time, and how do you unwind that? But I have a feeling we're going to be talking about it one way or another, and that decision is supposed to come out. So I usually ask you what you want to talk about. We usually kind of go with what's hot, but I'm going to make a bet right now. There's a high likelihood that we talk about, at least for some portion of the thing, next in 2 weeks, tariffs, because something's coming out of this one way or another, and I don't know how they're going to reconcile either decision. To be honest with you.
Mm-hmm. Yeah, that'll be super interesting to watch. And we got to reverse tariffs, and that will be an operational nightmare. But
right,
that's what it is.
Right. So, all right, Matt. Thanks everybody for watching us. Again, you'll always see where you can reach out, ask us questions, maybe a topic you want us to talk about. We'd love you to subscribe to our YouTube channel. Love you to get it out to people. We've gotten great feedback from people that are out there actually watching it and listening to it. They like what we're doing as far as not talking about beta and alpha and all kinds of technical stuff, but just talking about how portfolios are going to affect people's not just their portfolios but their lives. So thanks for joining us, and we'll see you next time.